In an uncertain economy, businesses face amplified threats, making strategic risk management through targeted insurance solutions more critical than ever. Economic downturns not only heighten traditional business risks, but also introduce new vulnerabilities, underscoring the importance of comprehensive insurance coverages that can help enterprises weather economic storms. Firstly, cyber risk insurance becomes indispensable as economic hardships lead to an increase in cyber attacks targeting vulnerable businesses. Industries heavily reliant on digital infrastructure, such as finance, retail, healthcare, and manufacturing, are especially susceptible. For example, a recent incident involving a mid-sized electronics manufacturing firm highlighted the devastating potential of ransomware attacks. This attack halted their production lines and compromised sensitive client data. Cyber risk insurance covered not only the direct costs of restoring systems and securing compromised data, but also expenses related to legal defense, crisis management, and public relations efforts, necessary to maintain customer trust and minimize reputational harm. Next, directors and officers insurance offers critical protection in uncertain economic climates where executive decisions are subject to heightened scrutiny and litigation risk. For instance, during recent financial turbulence, senior management at a Hong Kong fintech enterprise faced serious legal action initiated by investors dissatisfied with business decisions made by the executives. D&O Insurance absorbed extensive legal defense fees and settlements, allowing the leadership to focus on recovery strategies without the distraction and financial burden of litigation. This coverage is particularly valuable for publicly traded companies, startups seeking investor confidence, and firms undergoing significant restructuring. Then there is employee compensation insurance, which remains a cornerstone of responsible corporate governance and legal requirements, particularly in sectors with substantial physical risks such as construction, logistics, manufacturing, and hospitality. During economic downturns, even minor workplace accidents can severely strain a company's limited resources. Consider a logistics firm where warehouse employees were severely injured due to a reduction in safety measures driven by cost-cutting efforts. Employee compensation insurance provided a settlement that allowed the worker to receive medical treatment, rehabilitation, and lost wages, significantly mitigating financial and operational disruption for the company, as well as preserving workforce morale and operational continuity. Workers' compensation insurance is mandatory in Hong Kong, but for companies operating in high-risk industries, it is worth conducting an annual review of existing coverages, especially in light of an uncertain economic climate. From here comes professional indemnity insurance, which is particularly vital for professional service firms such as financial advisors, architects, consultants, and legal practitioners whose work directly influences client outcomes. Economic downturns typically coincide with increased litigation claims, alleging negligence or failure to deliver services adequately. A well-documented case involved an architectural consultancy sued for substantial financial losses related to perceived design faults during a market slump. Professional indemnity coverage provided essential legal resources and settlement expenses, ensuring the firm's financial stability and protecting its professional integrity from potentially devastating reputational damage. Coming next to public liability insurance, which is crucial for customer-facing industries like retail, hospitality, and entertainment, where public interactions are frequent and the potential for third-party injuries is significant. During recessions, businesses may inadvertently compromise on operational standards due to budgetary constraints, thereby increasing their liability risks. A local restaurant chain discovered this when cost-cutting led to reduced safety protocols, resulting in a severe customer illness. Public liability insurance covered the resulting medical and legal expenses, preventing significant financial and reputational fallout for the restaurant. While public liability insurance may not be mandatory in Hong Kong, it is often worth having the security afforded by a comprehensive policy, even in the economic good times. For companies sending goods overseas, trade credit insurance emerges as an essential tool during recessions, protecting businesses from substantial losses due to customer insolvencies and defaults. Export-oriented industries such as electronics, textiles, luxury goods, and automotive parts manufacturers, who may be particularly vulnerable to global economic volatility, have benefited significantly from such insurance. A notable Hong Kong electronics exporter faced substantial financial challenges when international clients defaulted on payments amid global economic instability. Proactive investment in trade credit insurance enabled the company to recover unpaid invoices swiftly, safeguarding critical cash flow and sustaining operations during challenging times. In a similar vein, business interruption insurance plays a pivotal role during economic recessions, providing critical financial support during unexpected operational disruptions. Retailers, hospitality providers, and manufacturing businesses particularly benefit from this coverage. A local retailer suffered significant damage to its premises from severe flooding, exacerbated by maintenance cutbacks due to economic pressures. Business interruption. Insurance provided vital coverage, including compensation for lost income, temporary relocation expenses, and additional operational costs necessary for a rapid return to full productivity. Finally, commercial goods liability insurance becomes essential for sectors such as manufacturing, pharmaceuticals, and consumer products, where product-related risks increase during economic recessions due to cost-saving measures impacting quality controls. A pharmaceutical firm faced significant allegations of distributing defective medication. Commercial goods liability insurance absorbed the legal defense and compensation costs, allowing the firm to address the allegations responsibly without debilitating financial consequences. Strategically addressing all these risks through comprehensive insurance coverage is critical for businesses navigating economic uncertainty. No matter what sector an organization operates in or what it is the company does, waiting until it is too late can be catastrophic. Acting now and laying the groundwork for solid risk management means that you will be prepared to face tomorrow's challenges, no matter what happens. For more information about your business insurance options, ask CCW, where your insurance is always swift, simple, and sorted.